Good morning. I hope you're all having a great day so far. My name is Debbie B. Nucci, and I'm with BAI. And I have the pleasure of kicking off the FinTech 100 CEO panel. This is the third year that, along with American Banker, Bank Technology News, and IDC Financial Insights, that we've brought this session to you right in the expo. And it's our opportunity to be able to have executives of major technology companies share some insights with you about what they're seeing as we look at innovation in the financial services industry. I'm so pleased that we have John Nevel, who is the president and CEO of D&H USA, and John O'Malley, who is the CEO of Digital Insight. Due to a last-minute scheduling change, Andy Mattis was not able to join us, the CEO of Diebold. But we're so pleased to have both of you with us here today. And Penny Crosman is going to moderate the panel. She does a great job every year, and I know you're going to enjoy this session. So thank you for being here. Penny?
Thank you so much, Debbie. It's a very nice introduction. We have two men here, as Debbie mentioned, who are leaders in the industry, and their paths have sort of almost crossed many times. They both started with a military background. Bill started as a Navy flyer. He was actually involved in the Yom Kippur War in the Middle East. And John designed guidance systems for the Persian missile for a private contractor who worked for the government. Lockheed Martin worked for the government. And then John actually founded Harlan Financial Solutions and ran the company for 9 years. And Bill Nevel is now the CEO, the U.S. president for D&H, which recently bought Harlan Financial Solutions.
Correct.
And both men have been on the board of D&H, but not at the same time. They actually just met about 6 months ago. So it sounds incestuous. It's really not, but they just have sort of parallel lives in some ways. Why don't we start, just to sort of set the stage, can you both share a little bit about what's on your drawing board? What major sort of technology themes do you think will be big in the coming year that are relevant to our audience? You know, kind of what big things are on your drawing board for 2014?
I'll go. Okay. Still getting used to my Lady Gaga mic. At D&H, it's a little bit different than probably most firms. As most people probably by now know, we are a recent owner of Harlan Financial Solutions. In the past, we had three other companies, CompuShare, MortgageBot, and an LOS provider named Avista. So, you know, our drawing board for the next year or so is sort of in two general areas. One is to bring those firms of products really together. Within that whole product set, there are several clear industry leading products by the installed base. So in MortgageBot for the POS, and CompuShare for cloud servicing, and in Harlan Financial Solutions around compliant documentation. So we have a lot of work to do to integrate those, because in spite of the fact they're industry leaders, they're not fully integrated today, so they were separate firms. And two, the other side of the roadmap is really around the newer or changing technology, primarily payments and mobile. So you know, aside from the regular work of continuing to enhance your products, I think those are the two areas we'll spend most of our time on.
Okay, great.
I just recently joined Digital Insight as the CEO as part of the spin-out from Intuit. And when we look at the business today, we focus on the digitalization of the interaction with customers and financial institutions. And everybody is looking at mobile and the expansion of mobile and tablets and the impact of tablets and the overall interaction with their customers within the financial institution. We're looking at how we take that deeper using the digital platform we have and looking at those channels as everybody else is and expanding it, but then also how can we drive content and experience much broader through that user experience, but also starting to look at what's also changing is the branch and how are branches actually evolving as part of the changes that are occurring in the industry. And how do you create a more seamless experience between the branch and the digital channels so that your customer actually has a more holistic view of the relationship with the financial institution? And there's lots of metrics that kind of drive that relative to the types of interactions you can have and how that kind of allows you to grow revenue, reduce your OPEX, and gain more market share with your customers. So our focus is how do we drive that platform and bring more content and more customer experience or more synergy from the digital channel back into the branch.
Okay, great. So since you brought up the branch, what do the two of you think the branch of the future will look like? In 5 years, will we have bank branches? And if we do, what will be some of the technologies that will be important there?
I think we will have branches. I think that the community banking industry, and perhaps the whole banking industry, is unique in that the evolution brought about by new product and technology and new channels it's continually forced the industry to evolve, and yet the unique part of the banking industry is we never leave the old behind. So we still have large percentage of our customer base who do visit branches, and the need for a branch is still there. Now, every time a new channel is developed, it takes some volume away from the other channels, so they don't completely go away. They may be reduced, to a degree. So I think one of the struggles that banks have to deal with is how do you keep all of those different touch points to the customers and keep them and deliver them in an efficient, cost, effective way. That said, I think the branch, going out sometime, the branch of the future will be untethered. Clearly, the demand for mobile devices, mobile applications, but the use of mobile devices, I think, is driving. There's no surprise to anyone. It's driving a lot of our focus on technology. And it'll be not as much the standard queuing line, but the ability to kind of go anywhere in the bank and see the same experience that you would see at home through internet banking or through an app that's directly into the core system. So I think there'll be a lot of bringing together those technologies from a user experience for both the people who work in the banks as well as the customers who are visiting the branches or conducting their work from a remote location.
I would share Bill's comments and views. Certainly, branches are not going to go away. The footprint of branch is going to change. The interaction model is going to change. I think we're about to see the most profound change in banking as it relates to the interaction in the branch and to the customer through technology. And it's all about how do you change the model to where it becomes more engaging at any touch point, whether in the branch or outside the branch, and how could technology bring that forward? So today, everybody's an expert there, right? Because there isn't a defined model, but we share similar thoughts, and definitely technology will be part of that as a strategy. And in most cases, banks and credit unions today view themselves as having more people that are cross-functional and roamers, if you will, okay, and more high touch, because once they get a customer into their brick and mortar, they want to have an enhanced engagement model because that's almost the last frontier to have that face-to-face engagement, okay? And you have to drive that experience very differently and drive down the OPEX as well as traffic, declines in the branch.
And Bill, when you said untethered, did you mean like the tellers are no longer behind the teller counters, they're roaming around, they've got a tablet or iPad app, and then maybe and also maybe interacting with the consumer's own device as they use geolocation to realize they're in the branch, and then you can shoot them apps or information that way?
Yeah, I mean, I'm not envisioning a totally untethered cash dealing teller line. I'm not sure how that would work with multiple journals and those kinds of things. But clearly, the ability to originate a new loan to a cashless deposit transaction can be done anywhere, and it's done today. From a car. Well, some people are moving. It can be done anywhere today. And when you go into a branch, you're going sort of back in time in a lot of ways because it's a different environment than you experience outside. And I think the demand will be for a consistent experience. And an advanced, a high-level experience that you would receive, elsewhere. There are there are banks today, we have a number of them, and other firms have a number of them, who can originate a mortgage, from first application up to the close with no interaction and no paper. That process is not quite put together, as smoothly as you would expect the user experience to be, but it happens, and it happens, all the time in high volume environments. So, to do something that complex and be able to do that remotely says that, we need to bring the branch, what's in the branch, ahead in technology also.
Sure. Debbie Bianucci just shared with me a little bit of research. She said that BAI conducted some study and found that banks are investing about 45% of their IT budget on regulatory and compliance issues. So the question is, how do you innovate when you're investing almost half of your resources just in, checking the boxes and playing by the rules? How do you make the time and the money available for new things? And because you still got to keep the lights on as well as comply, so what are your thoughts on that?
Well, I think you have to look at what your technology investment is, and you have to grow revenue. You have to grow wallet share. And I know it's difficult to do when you have such a high percentage of your budget going after regulatory compliance, but if you look at the metrics that are out there, in particular with digital channels, customers that use more than one digital channel, let's say internet banking and mobile right now, actually the profitability is about 52% higher than those that do not. Okay? If you take a look at retention rates, a customer that is using mobile channels, the retention rate is about 14% higher. And these are real metrics. And if you take a look at the number of accounts, which means you've had the ability to expand the relationship, the average person that's using multiple channels and using a mobile channel or an internet banking channel has an average of 14 accounts, relationships, okay, or product relationships, I'll call it. So when you take a look at that, you have to invest in growing your business, okay? And if you're just focused on, I can't invest, you have to find a way. I can't solve that. We all have our challenges there, but you have to grow the wallet share and the revenue side of it, and you just have to pick and choose where that's going to come from. And today, it's in that customer engagement. Digital channels is a big part of it, mobile in particular. And in fact, we're beginning to see a lot more. It's growing for us quarterly, the number of only mobile customers our financial institutions have. Not even internet banking, going straight to mobile. And if you take a look at mobile interactions, the average person has a mobile that has internet banking and mobile banking, has an average of about 29 interactions with the bank a month. You go internet only, it's 10. Okay? So when you start taking a look at that span of interactions, I'd say you got to be certainly diligent with your spend rate, but you got to go where the customers are going, where the revenue is coming from, and where the expansion is going to come from.
Just a quick add, I agree with everything that John said. What we're also seeing is that the regulatory burden, that's not a surprise to anybody, and I think the percentage is very high, and I believe it to be true. But because of the burden is so high, it has spawned a lot of innovation and technology. So there are technologies in use today. There are companies, Verifin and companies like that, who are specifically focused on regulatory issues that really didn't exist not that long ago. And so it has brought about this innovation. And I think one of the areas that we all have to worry about is how do we integrate all of that. Certainly in the mortgage areas, again, it's a very complex area and a lot of regulatory oversight. But dynamically created, loan documentation governed at a state level and a federal level and sometimes local, being able to be produced automatically as a result of a transaction set is a great innovation. And so I think the answer is you have to use the technology to be able to keep up with it. That regulatory burden couldn't be assumed any other way.
Sure. Now, you brought up mortgages. Why don't we have paperless mortgages yet? Why can't I just go to a closing with my iPad and flip through? And maybe some people have it now, but why? I mean, we've got digital signatures. We've got mortgage application apps. What's holding us back?
Well, nothing really. As I said, we and other firms have some very, very high producing, high-end lenders in the country who are internet only. so there aren't any branches to go to, and they don't mail paper, so it's all electronic today, to the closing, up to the closing. Copies of licenses and copies of things are taken with a photograph and or picture on the phone and sent in. So it's done every day today. What we haven't really conquered yet, because of several firms involved, is sort of a really smooth, straight through. And I understand there's a bank that was giving an award yesterday from Korea, Hana Bank, that has done that. And I'm not sure what the regulatory environment would be like compared to what we deal with, but they're there, and so I think it's very doable, and it's done a little clunky, but it's done in fact today.
Okay, cool. Now, John, you had brought up that there's this rising group or emerging group of mobile only bank customers. They only interact with you for mobile. How do you keep that relationship sticky? You mentioned that they tend to interact more, which helps with stickiness. But when you're in the App Store, you're competing with a lot of other things. You're competing with games, and you're competing with Simple and Move In and Green Dot and a lot of other companies that are focusing all their energies on the customer interface, having a nice customer design. How does a bank, properly compete when that's the environment? How do you keep up with these companies who have really high production values on their apps, and that's all that they focus on?
Right. Yeah. Well, that's it's actually a great question. I think everybody is probably struggling with that today, to some extent, as they look forward. And one, it has to be, the user feels very critical, because we all have apps, and if you don't like the feel of it, you're not going to stick with it. We become very app dependent, if you will. The second is content, and what's the expansion of content? It brings up another parallel conversation, which is, what is the threat today with non-banks? 5 years ago, we talked about the threat was for a non-bank, and it was Walmart. Okay? Today, that's not really your threat. The threat is the providers of financial services that have the ability to provide the same type or potentially better mobile type experience in a more seamless environment straight down to your customer, and your customer isn't concerned about the brick and mortar at that moment, right? So it's about user experience, content, stickiness, but also a broader relationship, okay? Customers will still put value on the overall relationship they have with a financial institution if it's managed right, and you're trying to create that experience. So it's not just in the channel itself, it's where you're placing your overall investments, okay, in your brick and mortar as well as your mobile and your other digital channels and your other non-digital channels, creating that experience. It's proven that it creates stickiness, it creates better profitability, it creates better engagement, and then there's always the analytics behind it, okay? How are you driving your messaging and your opportunities through that mobile device? And today there's statistics out there that show, well, right now it's about 125 million smartphones in the US, and out of that, 1 out of every 4 of those smartphone users has an iPad, and they're using that technology. What has also been demonstrated is that your cross-sell ratio is a lot higher today through mobile, okay, than it is in other channels in most cases, okay? So you've got to create that experience, and you have to have the analytics behind it as well.
Any thoughts on user experience?
Sure. When you think about the population, and we always, through these different channels, we always talk about sort of generational, so like an older generation or middle generation, and when you think about sort of the younger generation, which, for me is a pretty broad statement, but how they're interacting, they're doing pretty much everything. A lot of us are doing pretty much everything on a mobile app, and you get pretty demanding about what that experience is all about. Not only response time and that type of thing, but how the look and feel is, how well it flows. People who travel a lot, who fly a lot, I go from a parking lot on my phone and select my seat and pay the upgrade for the seat if I have to get it, and I do it all on the fly. It's one transaction and I'm done. People who are working with PayPal and people who are working with other companies like that. And then you go to your bank, which should be the center of your sort of financial universe. You go to your bank, it's not the same experience typically. I have seen some great experiences recently that people are recognizing that and moving on. So I think that banks have to sort of compete at that level. Sort of unfortunately, I guess, because it's a little unfair. We're regulated to a degree. The the folks that are using those other apps don't have as much of a focus on personal information. They tend to share a lot of personal information. Well, we certainly can't allow that to happen. We have to be much more locked down in that area. So, the other firms operate without the sort of, again, regulatory oversight and requirements that we have. But clearly, we have to stay up, because I believe that's where the world is going. It's not going to leave the internet channel behind. It's not going to leave, branches behind, but it's going to take some volume away from them. There's an expectation there of a user experience that they will demand over time. So I think, to John's point, a lot of work has to be done to make sure you understand exactly what their expectations are and how you can deliver your products. And are you delivering that off a narrow transaction set that doesn't really allow them to do everything they want to do, or do you have to open up those interfaces? And so there's a lot there, but I think it's definitely worthwhile spending the time there and going there.
So John, you mentioned how important analytics are to be tracking what you're doing. What do you think are the important things to be tracking and measuring, especially on your mobile and online channels? Can you just throw out some metrics that you think banks should be watching on a regular basis?
I think there's a lot more focus today on actually, where they are in the phase of their life, and the metrics are changing in terms of, I think, what the expectation was. An example is, today a baby boomer, actually still has about 35 transactions a month for bill pay, and you get to a senior, and they're at just a few transactions below that, and then you get to a Gen X, or Y rather, and actually they're the lowest of the whole curve. And you have to ask yourself, why? They should be the ones embracing the technology. Well, they are, except they're going other places, right? They're going direct bill, they're going through PayPal, they're going somewhere else, to perform those payments. And so the question becomes, how do you look at those analytics? How do you look at your customer base? How do you look at the demographics? How do you tailor your products to them? And it's about knowing your customer. And you need to be mining that type of data and building that interactively into your channel. And people are doing that today. It's not that it's not being done, but that's what's creating a significant differentiator. And if you look at the primary competitors that are non-banks, they're actually doing much deeper data mining of understanding their markets and their customers and their potential customers than a lot of the banks are today. They're looking very broad, not very narrowly in the relationship, very broadly in the dynamics that are occurring socially and the behavior, and tying their experience and their products to a much larger demographic.
But what are some of those valuable things to be looking for? Because if someone's just checking their balances 30 times a month, I'm not sure that that's really valuable, right, to the bank. I mean, you're not getting a ton out of that. And what are some of the things, you mentioned bill payment, but what are some of the things those metrics that tell you, oh yes, this is worth the investment, this is working for us, this is meeting our goals?
Well, you have to look at the overall relationship, and once again, the profile of the customer, and look where there's gaps based on what you see as being the normal profile of products for similar type customers, but also you need to drive a little bit of a different experience, and usually I get in a little bit of trouble when I go down this path, and that is, I think the primary threat to banks is the payment industry today, and if you take a look at where a lot of people actually put a lot of value in their interaction, regardless of if a bank or not a bank, it's in getting money and it's in making payments. And there's some answers from that, but my view is, and where we're focusing ourselves is, instead of running away from the potential threat of somebody, and I won't mention names, we know who they all are out there, how do you embrace a strategy that allows you to participate to some extent, because those challenges aren't going away over time. In fact, they're only going to get deeper. And if you really think about it, whether it's bill pay, whether it's credit card, whether it's ACH, etc., a bank is a facilitator. They don't really have the rails. And the players that are out there that are competing for that space and causing that interaction that's very high value to a consumer, making a payment, they're much deeper in that payment rail system, okay, than a bank is. And we've got to find a way to where we can not run away from it, but actually how somehow we can embrace a strategy around that as we go forward.
Do you agree, Bill? Banks need to do more sort of partnerships, or
I think so. As I mentioned, the one before around AML, and there are payment partners doing some great innovation out there, and I think it's a great way to go. The payment business is obviously, everybody knows, is really hot now, and how do you do P2P payments on a real-time basis, and all of that is going to be someone's going to win that pretty soon, and I think there's a lot of great work going on. One point on the internet channel, this is again a singular application focus, but in our mortgage business, which I think is just kind of indicative of this whole side, we did. Last year we processed a little over a million completed mortgage transactions for the banks and credit unions, about 1,400 banks and credit unions. And what we do is we collect all the data that John was referring to, sort of a big data, but we collect it specifically around that. And then we go back out in a kind of a best practices case to all of our banks to say, this is the better banks, the ones that are doing more of it and more effectively, are having this many clicks to get to the final point. They have a drop-off rate of this, so you take how many people start and where they drop off in the application for those that don't finish. And we compare that and then take kind of a best practices look and work with our other banks to kind of adopt those. So I think that same thing can be done in all the breadth of what Digital Insight has done, or DI is doing, to look at all those applications, see how well it works, how well it's accepted. There is a lot of data out there, and if you're not analyzing that data, I think you're probably missing an opportunity.
And is there a direct correlation between how many clicks it takes to get through an application and number of drop-offs versus number of completes?
Absolutely. Yeah.
Absolutely.
And that's true for other products too, I guess.
Yeah.
So that's kind of interesting.
Yeah.
So a lot of bankers are struggling with profitability and looking for new sources of revenue, and obviously certain retail fees, are extremely unpopular. Are there going to be opportunities for generating revenue in the online and mobile channels in some of the areas you guys look at? Do you have any thoughts on that?
Yeah, I think it begins with sort of stopping the loss. That banks have always dealt with sort of disintermediation. It was usually around other investment vehicles and those kind of things. And I think now, more than ever, banks are facing competition on their fee side from companies that John was alluding to, people taking payments away, non-banks, those kinds of things. So I think adopting some of the issues that we're all facing and all dealing with on a daily basis to stop that from happening is a defensive motion, but it has the same effect, right? You're keeping the clients and you're keeping the fee revenue associated with it. And then I think from there it's more around the efficiency in the processes that you do have today. How do you make those more efficient? And certainly technology is there. There will always be new products coming down the pike, and I think that's something to focus on. But I think certainly from what we focus on is making sure that those products are as efficient as possible, and that the banks can effectively compete with kind of the new breed or the new competitors.
I would agree with that. It comes down to acquisition, lending. I think payments is extremely sticky and has to become stickier in the financial institution through broader distribution of capability. To Bill's point, and how you lay your technology infrastructure and your investment to manage that is key. You got to grow those relationships. But if you lose the payment business, and obviously if you lose the deposit relationship and as a primary deposit organization, and if you're not expanding that relationship through some form of lending, you've created headwinds, right? So it hasn't changed. I think the wild card is payments is changing very rapidly, and we can't lose payments, okay? Because bill pay is not taking off like this any longer in its classical sense or its classical model. So what do we do about that to have a more robust capability that you can push through to your customers?
And I just want to quickly mention there are question cards, so please, if you have a question, just jot it down. We're going to collect them in about 5 minutes. We're starting to see some banks like U.S. Bank and Regions Bank charge for things like mobile deposit or for really fast access to the funds you've deposited. Do you think we're going to see more of that? Are consumers going to get used to that? Is that going to be okay to start charging little fees for those kinds of conveniences on online and mobile?
I think over time, I think there's opportunities there to charge for fees. I don't think you can get too far ahead of yourself there, but I think the answer is yes. There's value in it, and there's value now in the ability to give them access to do that where they want, when they want, how they want. And I think I do believe that there'll be a continuation of people being willing to accept that at a certain price point.
Just to add to that, I think the innovative community bank will do two things. One, will let the banks that you just mentioned take the lumps on that and see what sticks and see what doesn't. And two, be standing by to take those customers when they do have a wrong. I'm not sure if I was running a community bank, I would be on the forefront of introducing new charges in these days. Just one other point I just wanted to bring back to the last question around efficiency, and this is not meant to be a commercial, and I won't intend it to be, but a lot of companies are adopting fully hosted applications and delivering through the cloud. The kind of overused term, but delivering from so that infrastructure costs go way down. People, the requirements for people on site to deal with those servers go way down, and the capital costs go way down. So there are ways, right there to deliver your product through channels that are much, more efficient, and that's mainstream now. It's not anything that's sort of way out there anymore, and it's been through the regulatory scrutiny and really found to be more secure, certainly network-wise, than trying to run an in-house operation. So we have and other people have several very large clients moving completely out of the infrastructure world into a cloud environment to get all their apps and email and Microsoft and everything on a cloud environment, and then be able to be independent of any device that you want to use internally. So pretty large cost savings in that area also.
And what about all the compliance and security concerns around cloud computing, especially customer data? There's so many rules around protecting that customer data, making sure that a data breach is not possible, make sure the data can't be used in the wrong way. Any thoughts on how banks can make sure that their provider has everything?
Yeah, I think the providers who are active today are sort of hybrid providers, and they're not the just big open cloud provider where there is no security or not much security, and they're not an individual in-house cloud where you get that it's just restrictive to one, and they've by and large built their businesses around things like email hosting and authentication. So specialty companies like DI again have built from the ground up that security. So by their very nature and the fact that they're under constant scrutiny for security and privacy makes them a more a safer option than trying to do that in-house.
What are some security measures that you have in place?
Well, the technology that's available today, provides. It's a matter of how much of an investment you want to put into it, and for us, it's constantly changing. I mean, it's a heavy investment because the technology continues to change. The bad guys continue to change their methods to get in there. Most importantly, it's you have to be diligent about it. I mean, it's about spending the capital, and it's about being diligent about it internally and externally. The technology is sound. The uptime that we have and the major players have out there, whether it's on bill payment or internet hosting or other types of hosting, the standard now is 4 nines, 99.99% uptime, okay, with the exception of some scheduled maintenance. And most hit that, okay, 99, maybe 3 nines and an 8 or 4 nines. So The stability is there from the major providers because the investment's there, and the regulators are all over it. Okay, but they're looking for persistence. Okay, what I mean by that is if your cloud does go down, does that mean you don't have access to any of your information because it's all gone? It's somewhere else, as opposed to, even if it's not necessarily operational, do you have some persistency in your data to continue to run your business? So I think that's where most of the focus is right now.
All right, let's take a few questions from the audience. Thank you for sharing. One question is, you mentioned payments. How can banks better partner with the payment networks, Visa, MasterCard, Discover, et cetera, and how can networks partner better with banks? Any thoughts?
Okay, I'll take that one. If you take a look at a lot of the payment providers that are out there that banks view as, or financial institutions view as being a threat, they have a desire as well, but no one wants to talk about it, right? Everybody kind of like runs the other way. A lot of them have a desire to get through the bank channel. And at the same time, the banks look and say, well, they're a threat because they're circumventing the bank channel. And the reality of it is, if you just take a look at it and you ask yourself, why is, and I've had this conversation with bankers when these the closed door conversations, the reality of it is if they can participate in the economics of a payment transaction, okay, they would do it with anybody that made sense for their customer base, for their user base. So whether it's Passbook, whether it's PayPal, whoever it is, if there's a way to embrace that and turn it into a user experience, create the stickiness, and give them a broader capability of being able to use that payment method to create stickiness to where you are that so-called portal, if you will, of payments, and you're still participating in the fee structure, okay, to where it made economic sense. My question would be, why wouldn't you do that? Okay? Because you don't own bill pay today, you own the relationship with the customer. Okay? You don't own that today. Okay? You may not own the credit card transaction in terms of the servicing of the relationship, but you can facilitate it. You may not own PayPal. You may not own the backbone of PayPal, but you can own the customer relationship, you can participate in the transaction flow. I'm not speaking for them, I'm speaking philosophically, okay? You're in the payments business, it's sticky, embrace it, and find ways not to run from the challengers, but to actually potentially participate in it.
You agree? Basically. Okay. Next question is, how important is in-branch technology innovation, such as digital signage and in-branch Wi-Fi, to slow down the decrease of foot traffic into the branch or increase the traffic in the branch?
I think we talked about that a bit. I think we have to change the branch to be more like the experience that people are living their lives by and doing all the other transactions that they're doing, financial and non-financial. So I think it's important that whole untethered branch concept of the customer service person being able to meet someone at the door and performing a transaction on an iPad, having the iPad, experience, the user experience, look like what's the app, so it's looking like what they use on their phone. Just ways of tying that together and making the branch part of that process as opposed to being separated from the process. So I think movement like that is a positive step.
Does digital signage matter, or is it just sort of background noise? Or can it matter?
Regulatory.
It's necessary.
It's necessary.
I see.
Right.
Okay, the next question is on your thoughts on the CFPB and their intent to study non-bank payment systems and bring them under regulatory rules.
I'm sorry, could you repeat the beginning of it?
The question is, what are your thoughts on the CFPB and their intent to study non-bank payment systems and bring them under their regulatory rules?
I think they are the competition. I don't think the way you compete in a free market society is by just regulating everybody. So it's a bit of a political question. I think I'll probably stay away from that side of it. But they are the real competition, and I don't think you need to over-regulate them so that you can compete with them. I think you should be able to compete with them without the the help of organizations like that.
I agree. I mean, personally, with my bias, I think it would be helpful for the banks, but I agree with Bill.
Fair enough. The next question is, how will the ATM experience converge with the mobile experience? What is the use case? We're seeing a little bit of that interaction between apps and ATMs. Yeah. So you can queue up your transaction and then just use a QR code at the ATM. Is that an important trend?
Yeah, I think it is actually, because it's another form of a payment. It actually is a form of actually getting cash through an electrical form. If you think about it, you could theoretically, okay, why wouldn't I be able to take that same concept and maybe pass that from here's my ATM withdrawal request, I staged it on my cell phone, why can't I go ahead and actually send it to you and have you go to the ATM and actually take that payment, okay? So it just starts to set the stage for a whole different set of dynamic around how you actually do more of a P2C, personal to cash, okay? And you can take that actually further into the branch experience, where if you're doing a deposit, and there's a lot of different talks about how you can do deposits in the branch with tablets and never go to a cage, okay? But then there's a matter of how do you get your cash. So maybe there's a barcode on a recycler or a special device, and you do your deposit, you want $1,000 back on your way out of the branch. It's a barcode that got sent to you internally from the branch inside a private cloud, and you basically, the cash is dispensed on the way out of the door, okay? So you take a look at it, there's interesting models that a lot of people are talking about around how it just becomes much more prevalent in the overall dynamics of how you can actually move cash electronically into your hands.
That sounds like it ties in with the efficiency you were talking about.
I think so.
Make it faster and easier for everybody.
Right.
All right, our last question. What is the importance of speed in time to market with new technology solutions? And I don't know if this person means from your point of view or more from the bank's point of view, like having the newest mobile app or something, but however you want to take it, how important is speed to market?
My view is our speed of market has to be about 2 steps ahead of our customers' needs. If we're too far ahead, it may not be the right thing. If we're there on time or a little bit ahead, that's what I call speed to market. From a customer's perspective, I think speed to market varies depending on the segmentation of your customer base. You know, our struggle is always trying to balance between different segmentation in the industry in terms of where we have to be when. From our perspective, it's speed to market is driven by our customers.
I agree. I don't think banks have ever and should never be on that real leading edge of introducing things. I think we still always have to worry about security and of course the regulatory environment, but security to our own, you know, for our customers and the data. On the other hand, I think you need to be positioned to be able to move quickly when you realize that something is here to stay. And I think that's just always having an eye on what's going on. So I would agree.
Okay, great. Well, thank you both so much.
Thank you
all
Penny.
for joining us. Appreciate it.
Sorry about that cough.